According to a new study, when it comes to cryptocurrencies like Bitcoin, new investors are often motivated by friends to take the plunge. It might host traps for the unwary, and this has been emphasized several times. Lee Baker, a certified financial planner and founder of Apex Financial Services in Atlanta, once said, "I don't imagine friends are talking about when they lost money. The sexy sells, the upside sells. But folks don't talk about the downside," he added. Nearly a third of new cryptocurrency investors in 2022 used a friend's opinion as their primary reason for buying in, according to a joint study. Recommendations from friends are the number one motivating factor for new crypto buyers and are probably the rave of the moment. That share compares with the 8% of new investors in more traditional assets like stocks and bonds. The disparity indicates that there is a social element to cryptocurrency investing not evident in equities or bond investing, according to the study. Although this isn't to say a friend's recommendation is necessarily a poor reason to buy into digital assets. On one hand, crypto can be an on-ramp to more traditional investments, which is generally considered a good outcome. The fear of missing out, however, can be a powerful propellant for investor decisions. Bitcoin and other crypto assets indeed rallied through 2021. It was a record year for digital assets as Bitcoin jumped from roughly $10,000 in the summer of 2020 to a peak above $68,000 in November of 2021. But the tide turned quickly during a so-called crypto winter, when investors lost more than $2 trillion in the year following the market peak. Hype from friends is greatly attractive, but the reality of crypto remains certain: volatility. A major economist at Johns Hopkins University and a persistent critic of Bitcoin and crypto in general, Steve Hanke, has taken time to bash crypto through his Twitter handle. This time, he likened it and crypto investors to a frog and a princess that wants to kiss, expecting it to turn into a beautiful prince. A well-known fictional story that illustrates this scenario. So according to Hanke, no matter how you kiss that crypto frog, it will not become a prince. Crypto is just like the princess and the frog. The only difference is that this frog isn't turning into a prince anytime soon, he tweeted. Also in March, Hanke tweeted that 3 things prove that crypto is not a currency for him, but a highly speculative asset. Those are unreliability, lack of stability, and susceptibility to fraud. He believes that these factors will continue to plague Bitcoin. However, according to similar reports, it was suggested that Hanke hinted at Pepe. Currently, the comparison of crypto with a frog clicks association with a newly emerged cryptocurrency based on the internet meme Pepe the Frog. Pepe. It was recently launched and it is fast becoming a popular trend. Over the past few days, Pepe has been demonstrating massive price jumps. But Hanke has established his claim: frog-like crypto can never become a prince. Nevertheless, this is not enough reason to hide Cardano under the shades of the pessimistic statement made by the crypto critic. Cardano ADA is fast becoming a prince in so many unpredictable ways. A big game changer is coming, and it looks like a prince. But enough with that extended metaphor. Cardano ADA has shared news of its recent ecosystem advancements in anticipation of the upcoming Voltaire era. The company has achieved progress in development of CIP 1694 and the Conway Ledger era. In addition, support for Plutus v3 has been incorporated into Conway. Modifications have been made to delegation certificates and governance ledger states have been added. Plus, the Haskell code documentation is now conveniently hosted on GitHub pages. The Voltaire era marks the final stage in Cardano's development, aiming to establish a fully decentralized decision-making mechanism. The new edition, CIP 1694, represents the first iteration of Cardano's on-chain governance, and its success will largely depend on the widespread consensus of the Cardano community. To encourage broad participation, the community is invited to participate in self-directed discussions and activities hinged on decentralized governance. With this upcoming development, Cardano is offering an open invitation to the global community leaders and groups to organize their workshops and receive financial support for doing so. This presents an opportunity for the community to learn about Cardano and engage in discussions about governance. Besides, the current weekly Cardano development reports highlight that the Plutus team worked on 2 things: macaroni indexers and Plutus built-in functions. The Marlowe team updated its report and made it easier to submit validators. The Mithril team continued to work on a new certifier service for their aggregator, and the Daedalus team worked on a solution for users to check the price of ADA without needing to use the CoinGecko API. In October 2022, after unveiling the Vassal hard fork, the Cardano founder, Charles Hoskinson, went ahead to speak about Voltaire. He said, "The age of Voltaire will soon be upon us as an ecosystem. It's going to unlock the power of millions of Cardano users and builders. It will also, once again, show the rest of the industry how to do decentralized governance just like what we did with staking. But moving forward, Cardano has one of the most detailed and accessible roadmaps in all of crypto, and according to this roadmap, the next big stage will be Volatility. This update will put together the final pieces required for the Cardano network to become a self-sustaining system. More importantly, there will be two key pieces here, a new voting and governance system and a new treasury system. So what is the goal of this stage? The goal is nothing less than the complete decentralization of the Cardano network and a more democratic way to vote on future updates to the blockchain. It will imply that maintenance and improvements to the blockchain will happen in a fully decentralized and orderly manner. To address the current question on your mind, complete decentralization means that Cardano will no longer be the management of Input-Output Global. The Blockchain Infrastructure Research Group has carefully groomed Cardano since its founding in 2015, and it likely means that Charles Hoskinson, the ever outspoken co-founder of Cardano and co-head of IOHK, will no longer be the focal point for any modifications to the blockchain. Yeah, you are right, the Cardano community will indeed be in charge. The age of Volatility has been teased since the blockchain's big developer event in Scotland last November, and new events around Volatility continue to take place this year. For example, a special Volatility workshop dedicated to community-driven governance took place from February 28th to March 1st, and on March 24th, IOHK released additional details on what Volatility will include. Generally, the market reaction to Volatility has been muted at best, and it's quite strange to be honest. People in the crypto world are obsessed with technological improvements, and this new upgrade to Cardano is much more focused on governance and the community aspects of how voting and the funding of new blockchain projects will happen. But let's be honest here. Cardano's second major stage of development, known as Shelley, was already billed as the era of decentralization, so any talk about even more decentralization coming to Cardano seems a bit superfluous for most people. It's like Cardano is moving around in circles. Of course, we'd like to ask what you think about that in the comments below. But it was around the Shelley period that the SEC started launching all kinds of probes and investigations into crypto and reasserting claims that most of them should be considered securities. If the SEC had its way, it would probably consider Cardano a security since Cardano is a proof-of-stake blockchain that relies on staking, and the SEC has expressly warned that it does not approve of staking. So could Cardano's big game changer have an impact here? Well, moving to an era of hyper-decentralization is going to absolutely scuttle the legal debate that Cardano somehow represents an investment of money into a common enterprise aligned with the expectation of profit. With Volatility, there will no longer be any central organization body, and that argument becomes muted. But there might be some additional efficiency gains courtesy of enhancements in the staking and validation process, and that might have incremental impact on Cardano's price. Plus, Volatility might lead to a more vibrant Cardano ecosystem and a more active Cardano developer network, and that also might help. But this alone might not stir the needle in terms of Cardano's price. However, so far the Cardano community has shown unflinching support even before the introduction of smart contracts and NFTs. Their belief in the project's long-term vision and commitment to the platform has laid a strong foundation for its future success. But the question remains, is it enough to skyrocket the ADA coin price? We all know the saying, Rome was not built in a day, and fair enough. The Cardano ecosystem has indeed witnessed numerous community-driven projects and initiatives, showcasing the creativity and resourcefulness of its supporters. These projects contribute to the platform's growth and inspire further innovation. It's the little things that make up the big things, right? But what if the little things are not sufficient enough to erect big things? Volatility does indeed sound big, but it might not be enough. Of course, we like to ask you, what are your thoughts? And that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.